Good evening, everybody. So today's market trading was relatively slow as far as the Dow is concerned. However, you can see what happened on the Dow. Traded positive today, back up above the T-line. We still have this big wedge formation in progress, with the bias right now to the upside. Now, some other strength indicators today was the fact that the transportation index was up strong. Now, note that it gapped up in the overbought condition, kind of filled this gap, so you have to be a little bit careful with some profit taking in this index. But the NASDAQ held up nicely, continuing this uptrend, and the S&P 500 also moved up nicely. So these indexes are starting to push toward the top end of the trading range. Yes, Boeing pretty much knocked some out of the Dow today. So things are probably a little bit stronger than what was being indicated by the Dow anyway. Okay, so because this market is moving in a nice steady direction, we've got lots of trades that are going on. For example, nice steady uptrend. Crocs, nice steady uptrend, but now we're looking at a shooting star. Got to watch to see if there's some profit taking. No concern with the Russell 2000. Not yet. They're getting just climbing into the overbought area, but we need to see confirmation that there's selling. So we need to be on guard, but it wouldn't be concerned just yet, especially when you're seeing the other indexes, especially the NASDAQ, trading up like this. You see the Russell 2000 and the NASDAQ kind of work in conjunction with each other. Actually, where were we? Oh. So when we recommended, somebody was asking today, why would you recommend what was signal here on PRVB? You can see that if you took out yesterday or today's trading, got a cradle pattern. Where would be our next likely target if it opened positive? Right, at least back up here. This is why you always want to see confirmation. That's why I'd rather be a day late than a day early. Here's a nice fry pan bottom breakout on MFGP, Micro Focus. But it opened down here. That kept us from getting into this position. Okay, so some of the other ones, we'll go through real quick what we got in portfolios. Val held right up, came up through the 50, held onto the 50. Looks like wave 3 to the upside. TFNX, staying above the T-line ever since this gap up confirmation, continuing this kind of J-hook type pattern off the 50. The auto parts, nice steady uptrends. And this is the type that you can really kind of have confidence in. Notice right here at the 50, started coming up, doji sandwich, kind of a scoop type pattern. All you have to do on this one is stay long as it stays above the T-line. Dana, same scenario. There's your bullish flutter kicker. There's your breakout of the 50 in this downtrend with a good little gap up. Might see a J-hook pattern now that you're up here. So if it opens lower tomorrow, you might take some profits and then just see if there's a J-hook pattern setting up for the next leg to the upside. Now, when I say keep an eye for that, out for that type of thing. Candlestick charts tell you exactly when to get in and when to close out. Scorpio tankers today should have been closed out. The reason I was putting this one up. Oh, on the other hand, look at this one gapping up. Kind of the same. So I was trying to show this as an illustration that you can see when the weakness starts coming into an uptrend. You can see when good comes in. Now again, you've got a gap up in the overbought condition, but there's another indicator here. They gapped up through the 200. It wasn't like they gapped up and there was nothing here. They gapped up out of this resistance level and through the 200. So this one, if you'd been long, you just stay long, but you put your stop at the obvious spot that tells you you want to be out of this trade, which would probably be right back at today's open. Is continuing its uptrend ever since the kicker signal. The kicker signal that broke out through this downtrend. And GLNG, another, I think this is another tanker. See the J-hook pattern. You stay long on this as long as it stays above the T-line. How would you define exuberance? Well, if there wasn't this indicator right here that they gapped up through the 200-day moving average, that would now become exuberance. But the fact that there was something that told you that everybody else was watching and they disregarded it, this would tell me, this wasn't exuberance, this was breaking through a resistance level. That's more compelling than if there wasn't this resistance level everybody was watching. So if there was nothing here and it did this, I'd be a little bit more attentive to making sure I have my stop in place. SPTN. The reason you would have held on to this Friday was you didn't have a sell signal. You just had a pullback. Now, today's trading, you had very simple criteria. This one, to stay long, had to open positive and trade positive. Now you can see what it's done. It's broken out. So that tells us you stay long on this one. And Iridium. Again, your gap up, breakout. Now you're getting a little bit indecisive up here. So if you put your stop right here at today's low, it came back down through there, what would be our suspicion? It's coming back, probably test the T line and or the 200. So getting ready to take some profits. AXSM, stay long as it stays above the T line. ENTH, stay long in this little slow curve, staying above T line. You just watch to see what happens right in here at the 50. CWH, these are all positions that we've recommended over the last few weeks that have been unrecommended. Inverted hammer doji, gap up, staying above the T-line. Now, notice where it closed on Friday. Bounced off the T-line, closed up. If it had opened lower and traded lower, that would have been a good time to close it out, because what would be our suspicion at that point? Back down to the 50. You were looking at SPNT? No. Which one? SPTN. No, this was not a signal. This was just a down day and an uptrend. Now, had this been a bearish engulfing signal, yeah, I may have been more apt to close out the position. But the fact that it wasn't a sell signal and it closed just below the T-line, now you kind of rationale that if it isn't a strong reversal signal, give it one more day. Now, had this opened lower today, which may have been a function of the overall market trading lower, or this opening lower and starting to trade lower, yeah, that would have told me they failed at this level. They're starting to sell off, so you're still stuck in this sideways trend. Yeah, I would have closed out the position then. You wait until it's almost closing when exiting a position such as Scorpio, or would you get out once you see it trading below the T-line? Nope. Remember, we're still wanting to see what the absolute close was. Now, you can offset that by saying, all right, it's closing, it's trading back below this level. Better, and I've seen Doji, Shooting Star, selling off, stochastics rolling over. I better at least close out half the position. Things aren't looking good. Then wait to see if it closes back up above the T-line. So remember, we're starting to identify sell signals in the overbought condition. It should be staying above the T-line. So when it opened and then started trading down, yeah, you might have said, all right, let's close out part of this position. So if I closed out half right here and half right here, I got most of this trade. Now that becomes a judgment call. I want to say a judgment call in the sense that, does this look like it's your best trade setup anymore? Doji, Shooting Star, selling. That might say, let's take off half the position because we don't know what's happening here. Now, remember our basic rule is you hold on to a position until you see a sell signal and a close below the T-line, or you start seeing sell signal. You can always take some off the table and go find another chart that looks like this. For how long is the best friend signal relevant to our prices higher? Or when can it be ignored? If you're referring to this, you have one simple rule. If you see a candlestick buy signal, in this case, the best friend signal bouncing off the 50, closing above the T-line, you stay long until you see a sell signal and it closes back below the T-line. And or start seeing some sell signals. This would be a good place to say, all right, let's take off half the position. Worst case scenario is that does a J hook, I can always buy some back. And we'll get to some of the other ones on the short side, kind of giving us that same rationale. So there's your Doji right on the 50, gap up, Morningstar signal. Now we're up here where we're at a resistance level. I don't know why I have that line on there. But right now, you're in another J-hook pattern. I don't know. Maybe that's the price. So what do you do with this one? You pretty much stay long. You're not in the overbought area. You just stay long as it stays above the T-line. Gates, same scenario. Morningstar signal, inverted hammer, gravestone doji sandwich. You probably can see kind of a little bit of a resistance level right in there. So you still just use the very simple rule of the T-line. As long as it stays above the T-line, you can stay with it. Axle, stay long. bigger again. Just stay long. This is what you call a double doji setup. Double doji is very easy to recognize. You see a doji, pull back, see another doji. Now remember what a doji illustrates, indecision. So when they're pulling back, just kind of quickly assume it's pulling back with indecision, which means if it opens positive, you can be buying again because that candle right there will be the same magnitude as that candle right there. And we've got a bunch of those. Here's kind of a double doji setup on CARB, which has a scoop pattern. Again, there's your gap up. Notice what it did on Friday. Came down and used the T-line as a support. Still would be looking for this to trade positive. If it breaks out through this level, what do we anticipate? Our scoop pattern slingshot effect giving us a strong uptrend. That's what the reason we recommended Land's End was there's your scoop pattern. A doji right smack dab on the 50 coming back up. Another one that you could anticipate a slingshot effect back up to the 200. HTHT, bobble breakout. Notice what it did today, and I say notice. Take good notice of what it did today. Opened here and closed here. Opened at the open of Friday and went this direction. So essentially, what do you have? This is what we call a trend kicker. That it's already in a trend and it's kicking up. What's that tell you? There's still lots of bullish force. So what do you do to add this all up? First of all, you have a bobble breakout, which is usually a strong indication there'll be more upside. Now you have a trend kicker signal. That's also indicating there's going to be more upside. So where would you suspect your next target to be? Right up here. So the combination of that trend kicker and the bobble breakout just gives you more evidence of strength coming into this market. Now, VHC, when it closed down here today, look at your wedge. First of all, you had a kicker type signal, and then it was staying above the T-line. Today, it had to open positive and trade positive. The fact that it reversed told you, this one's not working anymore. Close it out. Whoops, I didn't Sting. You could short it. However, remember what's happening in that whole sector. The tankers are acting well. I would probably look more for another J-hook pattern setting up than thinking that this is time to short this stock. The reason for that is you're looking at all the other tanker stocks. They're all kind of heading up. So this may just be profit taking. Well, we don't know how far the profit taking is going to be, but I'd be more oriented toward watching for a J-hook pattern to continue the uptrend, so thinking that this is a full-scale reversal. Or another way to say it is there's probably other places you want to be is just going short right now. CGNX, look when it broke this downtrend. There's kind of your in-hammer bullish confirmation. Doji, 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 kind of a double doji setup. Gap up through the resistance level. Wave 1, wave 3 in progress. So when do you start taking profits? This was a perfect short, meaning it was your kind of your bearish doji sandwich, failure at the 50, closed below the T-line. But today, look what happened. I'll go right back to it. Hold on for a second, Bob. So it did a bullish Harami today, even though you weren't in the oversold area. However, what was another indicator that they might be buying right here? Yeah, your bullish Harami. You can look straight across. That was your morning star signal. So when it got back to this level before, they started buying. They got back here and they did a bullish Harami. I'd be more apt to close out the position with the anticipation that at least they may be bouncing it back up to test the T-line. The probabilities are just starting to go against us. Yes, kind of a support level in here. On VHC, open positive and traded positive. And then as it started coming back down, first warning was when it came back down through the open, that's not good. I would have probably put a safety stop right here, just below the T-line, to say, if they came back down through here, what did that tell us about this formation? It wasn't going anywhere, and they failed to take it up. Put a stop someplace that says, whoops, it looks good, starting to come back. I better get a stop in, because I don't know whether they're going to take it down here. But even if it came back down through here, what did that tell us about this chart? It just wasn't going anywhere. And this isn't because of a percentage move. This is more saying, all right, what's the chart telling me? They aren't breaking out of this wedge, and they're starting to head back in the opposite direction. Now it looks like they've broken out through the wedge in this direction. So I kind of point that out to say, if I'm long a position, or if I'm short a position, we're still short this one. But notice where we are. We're right smack dab on the 200-day moving average. Kind of did this is a Harami, but this has a special name. This is called a homing pigeon, because the bodies are the same color. Well, what's this telling us? There might be some buying right here. So if I was short, where would be a logical place for me to say, man, the bulls are here, bouncing off the 200. Where's a good place to get out of this trade? I probably have a buy stop just above the high of the doji today, because logic says if they start opening this positive, and this is a potential reversal signal, instead of being a bullish Harami, it's a homing pigeon. But a homing pigeon needs bullish confirmation, just like a Harami does. So I'm putting a stop right there to say if they come up through that level with stochastics in the oversold area, bouncing off the 200, they better come out of that position. Is that homing pigeon any type of signal to watch for? No. Nothing that you can watch for. But it's knowing what it's telling you is more important. You can't kind of get ready to watch for a signal. That's the whole point of the signal itself, is it's telling you what's happened to investor sentiment. So when you see the homing pigeon, even though it looks more disguised than a bullish Harami, it's still telling you there could be a reversal in here. Get ready to come short position. Blue, stay long as this stays above the T-line. GMS. This is why the signal is your first clue. Morning star signal. Stochastics toward the oversold area. Let's make the stochastics bigger. And then remember our rule about signals. The bigger the signal, the more compelling there's been a change of investor sentiment. Closing above the T-line, breaking out through this level. You want to start buying this one on positive trading, and how long do you hold this? Until you see a sell signal and a close below the T-line. Or start seeing a sell signal a good distance away from the T-line, another place to put your safety stop right here. That if they open a positive and continue positive, that's what it's supposed to be doing. If they open it and start trading back through this level, it's doing what exactly we anticipate after that doji. Same thing on this one. Because of the gap up, hammer, gap up through the level, we stay long. However, there's a little indecisive trading. Tomorrow, if it trades back through the close of Friday, I'll start taking profits. Where do you think it would go to? Right back to the T-line area. WLH, same scenario. Look at your bullish doji sandwich breaking out. How long do you hang on to this one? As long as it stays above the T-line. Okay, the indicators. Labu, still moving up nicely. We're looking for this to see if it will break out through the 50. Nugget. Flying along. Still goofing. Nugget, what's this telling you? Probably don't want to be long, probably don't even want to be short. The gold stocks is just a nothing sector right now. If you're trading the biggies like NVIDIA, you can see what's happening. There's your fry pan bottom. Look what it did on Friday. After it pulled back, this is a very, very crucial visual analysis. They brought it back up and they didn't close it below the line. With that piece of information, we can make a decision. If you were long, you stay long as long as they probably open it positive and trade positive. Had it opened lower, again, probably a function of the market in general, you would have closed it out. Apple, on the other hand, you can see what it's doing. It held the T-line, left-right combo, broke out through this level, anticipating it's coming back up into this area. There's a trend channel. And entry point on positive. MT, I probably would not have been buying it today because it wasn't giving us. If you had been long, you would be long. As far as buying it, I wouldn't be buying it until if it breaks up through this level, giving me my classic fry pan bottom J-hook pattern. So there's going to be times where you just have to kind of sit and wait to see what happens. Same thing with Amazon. Amazon, if you were long, you would have stayed long because notice where it closed on Friday, right on the T-line. What would that have told us as far as today's trading? It had to open positive and trade positive. Would I have been buying today? No. I'd probably be more apt to be buying on a bobble breakout as it comes up through the 200. So there's going to be times where your charts are starting to set up, but they're not showing you anything definitive just yet. Same scenario here on Netflix. Look at your bearish belt hold. Where did we? Oh, I was explaining this in the training session over the weekend. The difference between a message and a bearish belt hold is look what happened when they gapped Netflix up after earnings the other day. I guess that would have been Thursday. They started selling it off. Now, if they had sold it off to right here and had a big gap up and didn't really come back into the trading range, that would have been a message. The fact that they came back down into trading range, that there's not a lot of strength there. That's more of a warning that you don't have a message. You have that bearish belt hold. Get ready to start shorting if it opens lower the next day. That means they're still selling. Right now, with today's positive trading, if you were short, you would have stayed short because notice they used the T-line as a resistance. You can still be shorting this one if they open it lower and start trading it lower, especially if they came back down through today's open. That would tell you this selling force was still in progress. Roku, you can see what's happening here. Fry pan bottom, kind of a little bobble setup. Notice the one feature about this uptrend. They haven't been able to close it below the T-line. Facebook, same scenario. This is the one I was looking for. To illustrate one from before. They pulled this back. We pulled it right back to the 50. That's what everybody's watching. What were we watching? They couldn't close it back below the T-line. So if you were long Facebook, coming out of this best friend signal, then a doji sandwich, you could stay long. May not necessarily have gone long. If I wasn't long, I'd be more apt to go long if it breaks up through here, telling me my bobble breakout or my J-hook pattern was in progress. And Tesla. So there's the same scenario. If they come up through a resistance level, what do they usually do? They'll come back and test it to see if it's going to act as support. So you're primarily right here on the 200 with an evening star signal. If you were long and you held on to it, what's your criteria for tomorrow? It has to open positive and trade positive to tell you that the support level is still acting as support. Or what had been a resistance level is now acting as support. And what does that tell you about the strength? If they start trading this positive, you can be buying because everybody and their brother can see it broke through a resistance level, came back, used that resistance level as support, and they're trading positive. Now everybody's confident, and that tells wave 1, wave 2, get ready for wave 3 to the upside. Okay. What else do we have? Oh, GNK was way up here. Here's another one that's in the shipping area that's held up above the T-line, but it closed right on the T-line. What's this tell us to do? If it opens lower, you close it out. Where is it likely heading to? Right back to the 50. So what do we need to see to stay long? You get open positive and trade positive. Okay, so in these market conditions, what we're looking for are the fry pan bottom breakouts. And that is one I've already done the picks for the night. Should have come back to that one. That one is a best friend fry pan bottom breakout. Where do you think the next potential target could be? Up here to the 200. So if Tesla opens lower tomorrow, you could. But you would probably want to be real nimble. Because it just came out of a fry pan bottom. You might be watching the classic, the J-hook pattern setup. So unless the market itself was showing that it was selling off pretty hard tomorrow, I wouldn't want to be too aggressive on shorting Tesla. Oh, it's up after hours? Okay. Yeah, so you still have to have one assumption, that as long as you haven't closed the T-line, still got strength. RB, if you want to do a credit spread, yes. Where are we? Monday. I'd probably do a credit spread on a weekly options ending Friday. Up about $1. All right, that's not real significant. Okay, so the fry pan bottoms are the ones you want to keep an eye on. ARA, the fact that they closed right here at the 50 gives you a pretty good clue that if they open this positive, you've got a fry pan bottom breakout. At least you know your next target is the 200, but at least you know what you should expect coming out of a fry pan bottom. That's a very strong price move. As you see in something like Arco, notice where it broke out. Right here where the fry pan bottom started and at the 50. So that was a combination of telling you if you saw strong trading here, it's breaking out through the 50 as well as the pattern, giving you that type of price move. Potential. This one in tap. Not quite a fry pan bottom. It could be put into the classification, but notice what it did today. There's your trend kicker signal, implying at least probably coming back up to this level. So the reason you want to go after the patterns is twofold. First of all, when they break out, your expectation is a very strong price move, big percentage move. Secondly, if the market gets soggy, the fry pan bottoms, the J-hook patterns, things that are built up by investor sentiment aren't going to reverse right away. This may take a day or two of maybe fizzling out, so it gives you time to get out of the trade. Brad, yes. So you can see this one could be breaking out when you're getting up toward the overbought area. This one was breaking out as your stochastics are getting up into the overbought area. So you're buying the signals in the oversold area. You expect the pattern breakouts when you're in the overbought condition. Whoops. Zillow, another fry pan bottom. And what did this fry pan bottom tell us? It broke out with your Doge sandwich right at this level in the 50. Where's your next likely target? Pretty good probability that it's heading for the 200. Fry pan bottom. Where did it break out? Right about where this fry pan bottom started. So what are we looking for coming out of a fry pan bottom? That exuberant buying, which usually gives you a good, strong price move. And that's the whole reason we're looking for these signals, is so that you are prepared for that big price move. So all boats rise on a rising tide. We're looking for the boats that rise a lot faster than the rest of them. That's Flexion. There's Halliburton with a big left-right combo after an inverted hammer signal. That's probably something that you want to start thinking about, maybe doing some call spreads. SPWR, there's your fry pan bottom slowly coming back up. Potential target up here. NTNX, the same scenario. There's your Morningstar signal. There's your Doji sandwich, giving you a McMuffin. Breaking out through here. Another one that's probably got the prospects of a good, steady uptrend. And SATs, same scenario. Except this one has a little bit of overhead to get through. However, if this came back up to the 200 and then broke out, lots of running room up here, lots of free area. And VCYT, there's your J-hook pattern. And notice what it couldn't do. Really didn't move too far away from the T-line, so there's your bubble breakout, which, if This one gets running. That probably going to get back up into this area. Not really did I say fry pan bottom on this one? This is more the fact that you're bouncing off the 200-day moving average, dojis. And notice the nature of this down here. Doji. When you start to see a lot of dojis, it tells you you don't see dojis here. Look at your left-right combo. Very doji sandwich. Until you start getting down in this area, that's where you start seeing some buying. You're in the oversold area. So if I had been shorting this one right here, when I saw this little gap down doji, saw this, I would have probably covered it right here. Not even a scoop. Well, yeah, not even a scoop. It's just you started drifting here, not giving you a very strong downside. But once you got here, remember, the whole point of the visual aspects of candlestick analysis is if it gets to a support level, what can we see well ahead of everybody else? Pretty much see that this is where the investor sentiment is changing. Yeah, the series of dojis. Remember what a doji represents, indecision. So if you're in a trend, and then you get in the oversold area and you start to see indecision, that's what's kind of, so this becomes a decent place to start thinking about buying. Or if you've been short, you start covering your short positions in here because you're in the oversold area and seeing lots of indecision. So we've still got a good market condition in the sense that even though, and I can probably make this small enough where we can see it, even though we're kind of in this wedge formation, what can we assume is happening right now? So we're just now getting in the toward the over area, but we're still trading above the T line. Getting the kind of the same scenario going on in the NASDAQ. So what we're watching is what does it do right here? If it breaks out, now we've got this consolidation over. Little gap to fill bothers me. On which one was that? Buy. And you've got the kind of the same setup. There's your resistance level. Starting to be compression. It's still above the T line. So is that the gap you're worried about? It could be, but it might not happen for 2 months. Right now we're just analyzing what's the overall trend doing. Now if all of a sudden it opens here and closes down here and a big bearish, they might be saying they're coming back to test the 50, which would be filling that gap. But as of now, we don't have any sell strength showing us that happening. Okay, let me take a quick look at the ones. Oh, I didn't even bring this one up. This one is one that we're recommending. Look where you are right now. You're at kind of that resistance level. But look what got you there. little wedge formation. And then what happened coming out of that wedge? There's your best friend, gap up. If this opens positive, breaking this level, I got a lot more upside. ACAD. Kind of there's your little resistance level. Look for wave 3. And PRQR, little fry pan bottom with the extra boost from this belt hold signal. Telling you they've wiped out a lot of sellers. Now they've broken out through this level. This should have more upside. Joel, that's all, subjective, or just, it's not the number of candles, it's the whole pattern. Now on slow curve setups, it may be only 4 or 5 candles. On a fry pan bottom, it could be 3 months worth. It's not the number of candles, it's the visual setup of a pattern, or in this case, a wedge. If you've got a pattern setting up for 6 months, that's feasible. But if you can see if it was a big fry pan bottom, the fry pan bottom is, you're not looking back 6 months. You want to see what's happened. If it happens to be a big fry pan bottom that's developed over 6 months, 6 months. Or if it's a fry pan bottom that's developed over the last 3 weeks, it's a 3 weeks on that fry pan bottom. Okay, any general questions on candlesticks? Somebody was asking earlier. There's kind of your little cradle pattern, gap up. Look at your trend kicker signal. Right here. Looks like a little red candle, yes. Red candle, then they gap it up. Trend kicker, what'd that tell you about this resistance level? Not acting as resistance anymore. Wave 1, wave 2, you're in wave 3. Today you had a dark cloud. So if this opened lower tomorrow and started trading lower, where do you think it's coming back to? At least to the T-line. You might take some profit. I wouldn't call that a fry pan bottom. Looking at it that long, I'd call it more of what they call an inverse head and shoulders. I think the Japanese race traders call that three valleys. So, but what I'd be looking at for my trade, since it's not going to be a long-term trade, is what's it doing right now. There's kind of our little morning star signal, stay in a T-line. So you just stay long. So I'd be looking more at this than what's happened on longer time frame. A kicker signal works where it reverses the trend. So on Hawaiian Air, it opened here, closed here, did a kicker signal. Opened here and went the opposite direction. No, that's not. A trend kicker signal is the trend's already in progress. Then notice you had a dark candle, open here, closed here. The next, on Friday, they opened it here and went the opposite direction. That's your trend kicker signal. So it's not reversing the trend, it's accentuating the trend. And I forget which one, it was on another one. Okay, any other general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Okay, take a quick look at these. DHI. All you can do here is stay long, except today you had a bearish engulfing. If you're long, it has to open positive and trade positive to stay in it. This one right here isn't a signal, but it's selling. Then this one right behind it is a sell signal. That's pretty much telling you they're starting to take control. Kind of a little scoop pattern with the inverted hammer, Morningstar signal, but you have a doji up here in the overbought area. You put your safety stop at today's low, yesterday's or Friday's close, because if it comes down through there, it's probably backing and filling to the T-line area. XBIO. You can be buying this one. Make sure your volume is hefty. But the fact that they gapped it up, consolidated, you can be buying this one. Delta. This one you can be buying. It's not going to make you a big rate of return, but you did do a left-right combo after kind of your belt hold type signals down here. If you're long, you stay long. If you're buying, I'd be more apt to get it up through the 200 because that's your target to fill in the gap right here. BRFS. You can be buying this one, bullish Harami. Just watch to see what happens when you get to the 50. Now remember, you need to see something dynamically strong because you can see what it's been doing for the last 2 months. Just sideways. You have a buy signal, so you better be breaking out, telling you there's a new strong force in it. FSCT. That's a kicker type signal. You could be buying this one. Now you've got running room to get back up here to the moving averages. So if I was buying this one on positive trading tomorrow, I'd probably just use a simple rule that I don't want to see it close back below the T-line. But even if it does, I'd close it out, but I'd get ready to buy it back on strength because of that kicker type signal. Cody, there's your best friend signal. This one, so a lot of people say, well, how did we know this was going to happen? You didn't. But what we do get out of this analysis is we can see what happened. A best friend signal anticipating more upside. If you want to go short on this one, you can. As long as it stays below the T-line with the anticipation that this trend is going to take you back down to the 200-day moving average. OGE. You can be buying this one on positive trading also. Just watch to see what happens once it gets to the 50. CPG. Another one that you can be buying. Just make sure your volume is good on a $4 stock. But I'd be buying on strength here using that the 50 as a support. This one was a toughie today. I thought this actually had closed as a a red candle, but apparently not. So if you're going to stay long on this one because you had the T-line crunch, notice what it did. I mean, this is very splitting of hairs. Notice they didn't close it below the T-line. So what do you want to see tomorrow? You definitely want to see it open positive to stay in it. Yeti getting a little bit toppy up here. The Stochastic's rolling over. And you had kind of a left-right combo, bullish engulfing. Put your safety stop right here at today's low. It shouldn't come back below that level. Daku, we closed out on Friday, but it is doing a bullish harami. So if you stayed in it, it has to open positive. The bullish harami tells you the selling has stopped. You might still be in this uptrending channel. I say you might be because if you can pretty much identify a parallel trend, that's more than likely what everybody else is watching. VSAT. Nothing magnanimous, that's not the right word, magnificent yet. If you happen to be long, it better open positive and trade positive. But as you can see, it's been pretty junky ever since they bottomed it out. So notice when it was time, if you were short, to take profits. Doji, long-legged doji, positive open. You should have covered your short position here. Why? Look where your stochastics were, and look how far away you were from the T-line. Where do you think it was eventually going to come back up to test the T-line? GameStop. Slow, steady uptrend. Just stay with it. Put your safety stop below the T-line. Visto, another decent-looking chart, but now looks more like a fry pan bottom. You stay long as it stays above the T-line. Advanced Auto, Morningstar signal, gap up. Wave 3 in progress. Obviously, you want to see if it can get through this level. If it does, might have a wave 3 of this magnitude. SBGL, left-right combo. Probably getting ready to take profits. Why? Look where they gapped up. In the overbought condition. Get a little shooting star. Now a doji. Now a bearish left-right combo. Get ready to take profits as this starts trading lower tomorrow. And GoGo needs to stay above the T-line. Big Delta, United. Another one that you get ready to take profits. You're just climbing in the overbought area and notice where your shooting star occurred. Right about the level it topped out before. So I would have a safety stop if I was long, right at yesterday or at Friday's close, because if it comes down there, more than likely it's telling you they failed this level and they're at least coming back to test the T-line. INSG, breakout. Little slow type breakout. Again, notice they couldn't close it below the T-line. I would suspect wave 3 being the same magnitude as wave 1. And PET was another good example of a T-line crunch that you stay long as it stays above the T-line. And when they crunch it up through a resistance level, that means something is probably going on. Barrick Gold, drifting lower. Gold, kind of drifting lower. You can see that there's really no direction on gold right now. Constellation Brands. There's your bearish doji sandwich. This one, you can get ready to short on weakness with the expectation they're coming back down here to test the 200. Costco, Costco, you just stay long. You're still in a fry pan bottom. I went to Costco yesterday because we had to buy 6 40-pound bags of bird seed the last 5 days. So we load up the cart. They have 10, 12 checkout lines, and they're all just constantly flowing. And then they have somebody checking at the door to make sure you got your receipt, but it's just a steady line of carts going out the door. So they must be making some sort of money. Home Depot, stay long as long as it stays above the T line. IGT, oh boy, I wouldn't, yeah, there's nothing you can really grasp onto there. I would be trading something else. This one I'd be more apt to go short, especially if it came back down or opened lower and started trading lower. Look at your Doji that failed right at the 50. Doji, hanging man, bearish confirmation. And now you're right at this level. If it breaks down through there, where do you think you're going? Down to the 200. Shopify, same scenario. Look at your perfect morning or evening star signal with a gap down best friend close below the T line. This one you can stay short because it didn't get back up above the T line. If I was short, I'd have a safety stop just above today's high. If I was still going short, I'd put a sell stop just below the lows. But if it comes down through there, where do you think wave 3 is going to? Down here to the 200-day moving average. Snap, somebody said they're reporting earnings tomorrow. Okay. Nothing you can do with this chart. This is not a reversal signal. So there's nothing to really latch on to. 240 pounds of bird seed. Yes, for 5 days. No, we've got, there's sometimes where we have maybe 15 or 20 of the goldfinches out there. Plus, we feed the raccoons. Raccoons are like watching acrobats. We've got bird feeders hanging out over the porches, and they'll latch onto it, and they'll stick their nose in one of those little holes, and they'll just swing back and forth. Yeah, the turkeys haven't been around. When it gets cold, they'll stay. Then, all heard my tale of woe. We've got skunks that come up right to my sliding glass door, which is underneath where the bird feeders are upstairs. And if they leak, it's just stifling in here. You can hardly breathe. We've got one skunk that's probably about 90% white. That stinks is right. And it's not like you can get away from it. The other night, the pizza guy showed up. Could hardly breathe, handing me the pizza. So bad. That's only if you get sprayed. Juice bar. Oh, Chuck, we've got 5 acres here, so they come from all over. So I can look out on any night and see 2 skunks, 3 raccoons, and 2 possums all out feeding out here at my back door. Oh, no, I'm sure as they out of the house, got that killer cat. He'll just run from me. Haven't seen very much deer this year. We stopped feeding the deer because western Pennsylvania is one of the bigger areas for Lyme disease. It ticks off the deer, so we've kind of stopped feeding them. Oh, SP, we've got a flock when it's fully staffed. about 30 turkeys. Yeah, I need to find something. Unfortunately, we had raccoons pooping all over we've got a deck that goes all the way across the front of the house. They poop all over, so I have to clean it up, and then I spread that animal repellent all over the back deck. Wake up the next morning, they pooped all over the animal repellent. So, all right, everybody. We will see everybody bright and early tomorrow morning. We'll see you then.